Is the S&P 500 index fund safe for beginners? Yes, the S&P 500 index fund is widely considered one of the safest and smartest investment options for beginners. Here's why. 1. Diversification equals lower risk. When you invest in an S&P 500 index fund, your money is spread across 500 of the largest U.S. companies, including names like Apple, Microsoft, Amazon, Google, and Tesla. This means that even if one or two companies perform poorly, the strong performance of others helps balance it out. In simple terms, your investment isn't relying on one company, it's protected by the strengths of many. 2. Consistent long-term returns. Historically, the S&P 500 has delivered average annual returns of 7% to 10% over the past 50-plus years. Yes, the market may go up and down in the short term, but over time, the trend has always moved upward. That's why long-term investors have seen their money grow steadily even through recessions. 3. Low fees, no expensive advisors needed. S&P 500 index funds are passively managed, which means they have very low fees compared to mutual funds or actively managed portfolios. You don't need a financial advisor or expert-level knowledge. Just open an account, pick a fund, and invest consistently. 4. Perfect for beginners, simple and stress-free. You don't need to watch the stock market every day or pick individual stocks. You don't need to guess which company will win. Instead, you invest in all 500 at once automatically. Set up Auto Invest, and you're done. It's that simple. Important note: all investments have some risk. No investment is 100% risk-free. If you're investing for the short term, the stock market's ups and downs might worry you. But if you're investing for the long term, 5-10 years or more, the S&P 500 has consistently outperformed most other strategies.